Hi, I'm Greg Heyem, Chief Economist at Halstead Property, and welcome to Behind the Numbers. In this episode, we're going to take a look at our third quarter 2016 Manhattan Market Report. And I'm very lucky today to be joined by Ayo Haynes from our Upper West Side office. Welcome. It's a pleasure to have you on the program.
Thank you. Thank you for having me as your co-host today. This apartment is amazing. 173 Perry Street on the heels of the Hudson. Incredible views all around. This Richard Meier masterpiece of wood, concrete, and glass design is a full-service condominium with a brand new gym and renovated building utilities. This eye-catching 3-bedroom duplex home includes 3 private balconies, 3.5 bathrooms, a media room, home office, and so much more. So, Greg, I think it's time for us to look at the third quarter numbers. I'm going to go explore this fantastic apartment. I'll see you later.
Thanks, Ayo. Have a good time. I'll catch up with you later. Well, the data continues to be dominated by luxury new development closings, which kept the average Manhattan apartment price over $2 million for the third straight quarter. Led by 432 Park, which featured an $88 million closing in the third quarter, the average price of just new development apartments hit a record $4.4 million in the third quarter. We have to keep in mind, though, that these closings provide a very outdated view of the market, as the average contract sign date for new development closings was September of 2015.
There are so many beautiful places in this apartment, but my favorite is right here at this custom banquette. You can sit and have breakfast or lunch looking out west over the Hudson. And this little area is actually perfect to watch the sunset or the cruise ships go by. But we actually have to go back to Greg because he has some resale numbers that we really need to hear.
Well, Ayo, resale prices were flat compared to the prior quarter, but up slightly from a year ago. They haven't really shown a lot of movement in the past year or so. However, smaller apartments continue to be the strength of the resale market, as the median apartment price hit a record high of $960,000.
With these amazing views and outdoor spaces, the perfect bottle of wine is a must. And here you have your custom wine cellar that holds 240 bottles and just a beauty to look at. So now let's go back to Greg, who's going to finish off the final points of his overview.
The main reason smaller apartments are the strength of the market is, unlike in luxury apartments, there's still a very low supply of smaller apartments out there for sale. On the luxury side, even though negotiability has increased over the past year, it's clear that many high-end properties still need price adjustments. All of this overpricing continues to lead to fewer sales, and there were 14% fewer transactions than the third quarter of 2015.
Outdoor space always adds value to a home, and this particular home has 3 balconies, all with incredible views of the Hudson. Now let's go to Greg, who's on the second balcony on this floor, and he's going to tell us about the economy.
Well, after a sluggish second quarter, job growth has picked up in New York City, and in August there were 95,000 more jobs than August in 2015. And finally, even though the Fed keeps hinting at a rate hike later this year, mortgage rates continue to remain at very low levels. And now we come to my mother's favorite part of the show. Hi, Mom. The Ask the Economist segment. And with me are the exclusive listing brokers of this tremendous apartment, the Friedman and Rosenthal team. Thanks for having us. You having a good time?
Fabulous. We love it here. You'll like this question. Do you see the polarizing presidential election campaign having a major impact on the New York City real estate market?
Well, presidential elections can always have an impact on people's investment decisions as they await the outcome, and this election sure has been a doozy, unlike any one we can remember in recent history. You have to remember, too, that we've already seen a slowdown in the luxury market due to overpricing at the high end for the past year or so. So I think that could continue that effect and increase it a little bit as people wait maybe until the new year to make these significant decisions.
Well, that's our show for the third quarter. Greg, thank you so much for allowing me to be your co-host today.
Oh, it was my pleasure, and I want to thank the Friedman Rosenthal team for letting us in here at 173 Perry, this magnificent apartment on such a beautiful day. Thanks everybody for watching, and we'll see you next quarter.